September import data that has come in at $34.4 billion. So this time around it has seen a sequential decline versus a number of $37.05 billion in the month of August. Now remember, of course, you did have the lower imports, which will last time around also did attribute to an improved trade deficit number. The exports, though, that'll be a crucial number to watch out for, because on account of the overall factors improving in the West as well, you had seen an improvement come into the export number, which certainly boosted the overall trade data. Methali Bushnulmat, the consulting editor with the Economic Times, now joins in. Methali, we just have one number with us at hand, the September import data at $34.4 billion. How would you react to this?
Well, the September import data was expected to come down because the rupee had depreciated substantially. So there was going to be some impact on the import values, apart from which gold imports had fallen very sharply during the month. So as a result, it was expected that import data would come down very much. But what we really need to see is the composition of imports. If what has come down is vital capital goods imports, then it would not be a very happy sign. But overall, yes, lower imports is good news, driven by the fact of depreciation in the rupee, as well as very much lower gold imports during the month.
We have Dr. C. Rangarajan joining in. Dr. Rangarajan, thanks very much for being with us. How would you react to this trade deficit number having narrowed very significantly?
I think there is a substantial reduction in the trade deficit. This is a combination of several factors, a pickup in exports and a substantial, and also a reduction in imports, particularly gold imports as well as the oil imports. Therefore, the direction in which we are moving is towards a level of current account deficit which will be even lower than $70 billion which we had projected earlier. Therefore, on the whole, there is every prospect of the current account deficit coming to more manageable levels during the current year.
Dr. Rangarajan, it seems that, a large part of the lowered number that we're seeing is also because of the administrative measures, the gold import curbs that have been put in place. Do you see them continuing then in the foreseeable future as well?
Well, the gold imports have come down for a variety of reasons, because of the actions taken, as well as because there was some lack of clarity on how to import gold for some time, and therefore there was no import of gold. But I do believe that as we go along for the year as a whole, the gold imports will come down to the more normal levels that we had seen earlier. I remember about a couple of years ago, the gold import was only $40 billion, and it went up to $56 and $53 billion in the subsequent years. Therefore, if we go down by $10 to $13 billion in the current year, that itself will be a big relief. Therefore, with the exports picking up and showing definite signs of rise, I believe that the current account deficit will be much lower than $70 billion.
But Dr. Rangarajan, would you not be concerned with respect to the current account deficit numbers on account of the way the global situation is also panning out? So do you think that it would be a little difficult to draw conclusions at this point in time, and that perhaps the effect of, the import, the gold import data, that will be a little limited when it comes to the current account deficit number?
Well, what happens to exports also depends upon the global situation. It certainly is conditioned by the state of the economy in the rest of the world. Therefore, we have to be careful, and we have to be constantly assessing what is happening in the rest of the world. Therefore, what we have seen in terms of the exports in the last few months may continue into the rest of the year, provided we do not see any drastic change in the world economy. As far as gold imports are concerned, I believe that the actions taken, as well as the general tendency of the inflation also to moderate, will have an effect upon the gold imports, and it will come down.